following program contains mature themes on a thematic subject. Viewer discretion is strictly advised. State of the Nation is an opinion-based program. The thoughts and opinions shared within this program are not intended to offend or disregard anyone's perspectives or beliefs. We aim to foster open dialogue, encourage critical thinking, and explore thought-provoking subjects. Recognizing the importance of diversity and inclusion, this program welcomes all viewpoints and cherishes the right to express them freely. This program also contains the opinions of the participants and does not reflect the views and beliefs of the Derana Media Network. The network believes in a safe space for all ideas to be expressed and on its duty to create such a platform for free speech. Viewer discretion is strictly advised.
Good evening. Tonight, global actuality and Sri Lanka's reality. Tonight, Sri Lanka is not merely facing another price shock. It is facing a test of statecraft. A foreign war may have lit the match, but the fire is now burning through fuel, food, growth, forecast, public trust, and even national security. The government keeps asking the people to understand the crisis. But the deeper question running is whether the government understands the country it is asking to endure it. For insights, analysis and opinions, tonight I'll speak to the Deputy Minister of Industries and Entrepreneurship Development, Chaturanga Abesinghe, former Finance Minister, Parliamentarian Ravi Karunanayake, Managing Director for the CPC, Dr. Mayura Nettikumarage, and Global Business Cycle Analyst, Dr. Kenneth de Zilwa. Good evening, I'm Mahieash Johnney, and this is the State of the Nation. Welcome everyone to the State of the Nation. Thank you very much for taking the time to check us out this week as well. There's a lot to sort through regarding our economy and security. So let's get to all that. But first, well, once again, we are being told to understand the war, understand Iran, understand oil prices, understand the IMF, understand the electricity formula, understand the taxes. Okay, for argument's sake, let's say we understand. But then, here is the question. Does the government understand the people? Because that is the part missing from this conversation. Now, in April, Colombo inflation jumped to around 5.4%. The previous month, it was 2.2%. The central bank says the increase came mainly from the spillover of the Middle East war and higher domestic energy prices. Yes, well, that's a fact. The Iran war certainly do have consequences to us here in Sri Lanka. But continuously blaming it on the global war and not having a plan within is not sound strategy, is it? You cannot simply raise fuel, raise electricity, raise taxes, raise transport costs, then walk in front of a microphone and say, Iran, beating that same donkey for countless number of times gets tiring. And the lack of a proper policy or a strategy seems to be glaring. What happened last month? Now, electricity tariffs rose for most households by 7.2%, industries by 8.7%, hotels by 9.9%. Even the poorer households were not spared. They faced increases between 4.3% and 6.9%. I'm talking about the raises last month, not the recent one. Now, in a policy paper, that may look manageable. However, at home, it is not. As mentioned before many times by us, the energy bill does not arrive alone. It arrives And when it arrives, transport goes up, then food goes up, then school expenses goes up, then the pharmacy bill becomes an optional factor for most households, and that is a quiet disaster. Now the big dramatic collapse, smaller collapses inside houses. They slowly cut down on this, that, and everything. This is where the government has to think, not explain. Think. The World Bank said Sri Lanka's poverty rate was still around 24.5% in 2024. That's nearly 1 in 4 people. That's alarming for Sri Lanka, especially coming out from a financial crisis. Touting Iran doesn't seem to be a feasible strategy anymore, because we are not the only country facing impacts from Iran. But other governments who are facing the same global pressures are still finding ways to shield the public. Now, look at the United Kingdom. Again, not paradise, not a model to worship, but look at their thinking. Look at what they did. Their government announced a temporary VAT cut from 20% to 5% on selected summer attractions, children's meals, cinema, and theatre tickets. They announced free bus travel in August for children aged 5 to 15 in England. They postponed the fuel duty increase, which was scheduled for September. They moved on target food tariff cuts. Now, if you actually go and ask anyone in the UK, they will say, well, that is not enough for that particular country. That is their issue. But what I'm trying to say is they did something, at least the bare minimum. Notice the difference. They did not say, well, there is a war, please suffer politely. They said, there is a war, so the Treasury must absorb some of the shock. I mean, it is not to say that our government is not absorbing some shock. They are, especially when it comes to fuel. But the question is it enough? Sri Lanka's VAT rate is already around 18%. So if the government can collect from everything, it must also know when to give breathing space to the public. Cut transport costs for low-income school children. Give a temporary electricity credit to lowest consumption households. Reduce selected taxes or levies on essential food supply chains for a fixed period. Monitor traders so the benefit reaches consumers directly. Protect daily wage earners. They are the most vulnerable group who cannot even work from home, cannot avoid fuel prices, and cannot absorb one more adjustment. Because anyone can raise prices, anyone can blame a foreign war, anyone can say, we have no choice. The job of the government is to find choices when ordinary people have none. Right now, as things are going, it seems the government is not cushioning the poor from the crisis. It seems like that it is using the poor as the cushion. We'll be right back. The state of the nation. Our lead story tonight, a war abroad and local cost of living. Now, a few months ago, Sri Lanka was told a very comforting story. The recovery we all prayed for after 2022 was here. The economy is stabilizing, growth was coming back, and we were told the country can absorb shocks. The central bank governor himself said the economy was expected to grow around 4 to 5% this year. In January, he even said reconstruction spending after the cyclone could push growth higher than 5% if properly and efficiently spent.
Our projection is not 3.1%, 4 to 5%. Who said 3.5%? We see economy is growing between 4 to 5% this year as well.
Well, that was the language then. Now listen to the language this week.
Our mandate is to maintain price stability, consistent stability under the law. That we have to deliver that. Growth, delivering growth, a lot of other things that has to happen, for example, tourism, agriculture, industry. That's why we have different institutions to promote that growth. I don't think central bank has any instrument to promote that kind of growth. We can provide the stability in terms of price stability, constant stability, that is necessary for any growth.
In other words, the recovery story now becomes with terms and conditions. To be fair, forecasts change. That is, after all, is not a crime. Now, global realities and local actualities change those forecasts for sure. But here is the problem. When the public was being told to trust the recovery, that message was very clear. Now, when the pain arrives, the message becomes very complicated. That is how ordinary people lose trust in governance. This flip-flop did not happen regarding the growth numbers alone in March. The governor said Sri Lanka was better equipped than in 2022 to absorb oil price shocks. He pointed to foreign reserves, low inflation, and said the exchange rate can act as a shock absorber.
Usually in our inflation targeting framework, exchange rate is the shock absorber. We let the absorb the shock into the exchange rate so that have a positive demand impact as well as cost recovery pricing well embedded into the system. Price will take care of the demand factor and obviously the impact on the economy. Growth, probably some slowdown if that continues. But we can manage the situation well prepared this time than earlier.
Well, it doesn't seem to be the government who's absorbing the shock or keeping the prices at bay, because right now we all know the reality. Joining me now is the Deputy Minister of Industries and Entrepreneurship Development, Fernando. Thank you very much, Minister, for taking the time. I sincerely understand that this isn't directly under your purview. However, since it's hard to get the minister in charge, he must be really busy at the moment right now. I'm coming to you on this. Now, the dollar came to around 350. Looks like it might go slightly higher. A lot of people are forecasting way beyond 370. Inflation is at around 4.7%. Fuel prices might increase again. Can't continuously blame it on global shocks, can we? And put the pressure on the public. So what is the government's relief package to the people in order to make sure that they don't suffer from this Iran war?
Hi Mahieash. So I think this was very much known for the last few months. So government has taken very strong steps to ensure that the entire pressure that's coming from the global issues are not fully translated to people. That is why government already released 100 billion rupees to meet this crisis, and out of that 57 billion has been given as subsidies to fuel, especially for diesel, 100 rupees or 20 rupees for petrol. And also we have taken the burden out of the electricity. 95% of the citizens will not feel any change in the electricity price. At the same time, the farmers has been given escalated allowance for their fertilizer subsidy. The fisheries industry has been given support. So therefore, government has not fully translated the burden of the globe. And going forward, we are also seeing how we could directly support areas that we should. And at the same time, the currency is stabilizing. There was a kind of a panic buying, but now we are seeing things are stabilizing.
Minister, what's the long-term plan? Of course, the Iran war will have repercussions, especially to a country like Sri Lanka. Now, what's the recovery plan for our economy, especially in developing our industries and keeping the economy moving?
Sri Lanka has already recovered. Sri Lanka had a remarkable 2025, so that probably was one of the strongest financial years, both physical and macro. So therefore, we are just feeling the heat from the global uncertainty that there are slowdowns in tourism. Anyway, this is off season, and we see some of our exports have reduced. But we are very clear that the global situation going forward is felt by rest of the world as well. So we haven't lost our competitiveness. So we will be doing the development piece that we were doing in order to attract the foreign investments and the required industrial growth. So therefore, there is no slowing down of any of the budgetary items that was planned for this year, which is close to about 2 trillion rupees of development. And also in terms of the reforms, there's nothing that's going to stop due to this change in the world. So we are very hopeful as the world settles down, we would be a beneficiary out of this, especially Sri Lanka being a politically neutral country and being able to attract some of the investments that may have gone to the Middle East as well.
Minister, there are conversations right now saying that it's high time the government begins talks with the IMF for the 18th program due to the current crisis. Even the opposition leader said the same in Parliament. Now, this government said your target is to fix the economy as such that you will not have the need to go to the IMF ever again. Will the government rethink that?
Actually, there is no need of thinking. I think previous governments continuously failed on their journey. That's why they had to go 17th time to the IMF. So we are very much clear that the current program is absolutely successful. I think I don't have to tell. The country head, Mr. Evan, has given a clear statement, including the IMF, how Sri Lanka is strongly moving on the program. And with the current data and statistics, there is no crisis at all, and we have enough reserves, and we have enough potential to grow, with the economy growing at 5% and exports are also growing close to about 5 to 8%. So there is no need of a discussion of 18th program. This program will end next March 2027. And IMF is only required if there's a balance of payment crisis or a currency crisis, and we don't see any necessity to that. And we are very confident that Sri Lanka can service the debt repayments that has been planned for the next 5 to 6 years, one starting at 2.7 billion, going probably up to about 3.2 billion a year. So far, there is no such need.
Indeed, all right. Deputy Minister of Industries and Entrepreneurship Development, Chaturanga Besinga, thank you very much for your time.
Thank you.
Really appreciate it, sir. Let's take a short break. More on the economy later. I'll be speaking to the Managing Director of the CPC as well to get an update on fuel stocks and prices, and also we'll dissect the economic numbers with Dr. Kenneth. Zilwa. That's coming up shortly. This is the State of the Nation. Welcome back, everyone, to the State of the Nation. Now, the state of our nation as of right now seems to be in dire conditions. There is a cost of living storm hitting Sri Lanka tonight. Economic pressure does not stay inside the economy. That is the part the government often pretend not to understand. Now, the dollar is over 350 rupees. Inflation is at around 5.4%. Fuel costs to everything seems to be rising rapidly. Now, we've been talking about this throughout this program. So the government should not only be asking, how do we balance the books? That is the accountant's question. The government, the governing question for them to ask is bigger. What happens when households run out of wiggle room? What happens when small businesses run out of cash? What happens when public patience runs out before the recovery arrives? Well, joining me now to discuss on this is Dr. Kenneth Zilwa, Global Business Cycle Analyst. Well, good to have you, Doctor. Thank you for being here. Before we get into all the numbers, I want to get your take. Over 350 rupees the dollar.
Yeah.
The previous crisis in 2022 started when the dollar rate went to around 370.
Correct.
So we are almost there.
Yeah.
Are we expecting another crisis as such?
Mahieash, thank you for inviting me once again. I've been saying this right along. I said that the false sense of stability is a great concern for us, and that the external balance sheet is in a precarious state, and therefore Sri Lanka can't afford to have these types of stringent measures that are imposed on local balance sheets, which generate external revenue. And that is precisely what has happened now. We don't have any kind of buffer that has been set in to weather any kind of external pressure, because I said the current account surplus that we have generated is about $1.2 billion annually. So that's about, if you take the cumulative figure, that's about $100 million a month in terms of overall saving that we have as a result of this contractional policy. Now, the toss-up is, could you have expanded that more if we focused on growth? And I think the answer is yes, right? We took the policy decision at one point in time when we had to service debt. We went ahead with liberalizing vehicles at a point where we shouldn't have done it, and I was actually against that particular policy decision for the simple reason was that we had to accumulate dollars to service our dollar debt, and there was no physical space to do anything else, and therefore the argument was if we allow vehicles, we could raise our revenue targets and match the IMF. So that was the argument. Now the question is, do we need rupees or do we need dollars? We defaulted as a result of lack of dollars.
Yeah.
So we ended up collecting about ₹1 trillion in excess revenue as a result of vehicle liberalization, but we lost about $3 billion in the meantime from reserves, possible accumulated reserves.
Reserves itself has now come down, and the government keeps telling, don't worry, reserves are there to be utilized. This is not the same tone that they had prior to 2022. So that is where I'm actually having a confusing moment in order to try to understand, because you said debt. Debt was the one that drew the whole 2022 crisis. Nobody's talking about debt at all right now.
Yes.
We even don't know how much our debt portfolio is right now. I think it's way beyond $100 billion.
Yeah.
So in that capacity, we're taking loan after loan after loan after loan. Very conveniently, in that instance where the government keeps saying, don't worry, everything is fine, because in March, the central bank governor said, this fuel shock can be absorbed because the economy has recovered such marvelously that we can take the hit.
Yeah.
Why do you think, they were so confident and you're not?
Well, technically it is about cash flows for me. It is not gross numbers, it is about the net figure, and ultimately bottom line is cash flows, because cash flows is what matters. Right? When we looked at the numbers, there was huge cash flow stress. You spoke about debt. The debt stock currently is about 30 trillion. It's almost close to our GDP, so $100 billion in total. A little bit more, but let's take for argument's sake, it's about 30 trillion rupees as at, I think last month, if I am not mistaken, the numbers. Our external balance sheet, I keep coming to this because this is a critical part of our overall focus. Whatever we do in terms of our current account, it feeds into external borrowings if you don't have dollars. Because rupees is not going to suffice, we have to have dollar generation capacity. So all these exports and services that we talk, I said the bottom line is $1.2 billion net saving to this country. When you take that and we add the debt servicing component, we are in dire straits because we have about four.
We haven't started that.
We haven't. We are doing some we are doing multilateral servicing. It's about $2 billion. That's $2 billion. If you take the debt servicing from next year, it goes up to about $4 billion. That's where the point is. So we spent $3 billion. We have ended up with rupees. Now we don't have the dollar buffers that we should have accumulated. We have rupees, and that rupees are not sufficient enough even to buy the dollars that we require.
This sounds so much like mismanagement again, all over again. How come?
I mean, more than the mismanagement, it is the nature of economics that is been taught. Yet the theoretical economics and practical economics are two different things. So if you look at it from a theoretical point of view, you might see the way we are currently taught to see. But if you look at it from a more finance, economics type
basically
of thing,
live on the ground.
If and you look at the numbers, then you tend to worry because where is the revenue coming? In fact, I saw the Joint Apparel Association making a statement saying that the costs are too unbearable and therefore people are now relocating. So that's another huge concern for us because those are the companies and the revenue lines that we need to protect. If companies are relocating, that revenue that is going to be generated within the country also is going to be lost in the future. So therefore our debt servicing becomes even more difficult. So that is number one. Number two, our external debt, as you rightly pointed out, the external balance sheet is in tatters. We started off with $47 billion external debt, total debt, that is total national debt, that is private sector, central bank, all that put together. We have $68 billion of external liabilities. We have $16 billion of external assets, including the central bank reserves. Therefore, the net difference is $50 billion net negative net worth of Sri Lanka. So each time we depreciate the rupee, that external debt stock, because the liabilities are greater than the assets, will get revalued. And therefore, we have to regenerate rupees to buy the dollars to pay for the debt. Or we have to earn dollars, which if we earn dollars only, we can. So
you're talking about, like, when you say regenerate rupees, those days what they used to do is print money.
Yeah.
So
printed money again is a different discussion. Now they are not doing that.
Yeah, exactly. Yeah. So now the focus has always been we have to earn dollars. So when we are earning dollars, what do you see that they have not done enough in order to, because we have to sell our products out there in order to earn the dollars. So tourism has been good, but now it's going down again. The other sectors are also taking a hit, especially the textile industry, like you just said. Felix Pereira, I think he was on the Nightly Business Report, and he basically said that this is not looking good, and most of the businesses are literally leaving Sri Lanka because it's very too costly for them to produce it here in Sri Lanka.
Absolutely.
So they're looking at Africa.
Yes.
So the opportunity is gone.
Correct.
So right now, what do you think that the government should have done? And I sincerely hope we're not too late at this particular moment.
I think we are a little late because we are now into the final stages of the IMF program. If you look at their final review, the statement that they made on the 9th of April, it clearly states that we have to follow the same path. There is no deviation. Revenue numbers have to be...
So there is conversation about let's go to the 18th facility as well.
Possible. That might be, that seems like a reality. I mean, I'm sorry to say this, but it seems like we're heading that way. So coming back to this particular point, the final agreement that was signed states that we have to continue to go beyond the revenue generation path, right? We have to have a free currency, and we have to have cost pass through onto the private sector and to the public. So no more cost reflective measures are to be adopted. Plus, we have to ensure that social safety nets are met now. All these four particular points.
How can you meet the social safety nets?
Absolutely. So poverty is the focus, not growth. So they are willing to dole out $1 billion of financial support to alleviate poverty and stimulate poverty and ensure that we are in poverty.
But that is also not sustainable, because as we go on, when the economy is falling from this side, people who are in the bracket of poverty is increasing. Right now, I think the UN has put the figure at around 24% here in Sri Lanka.
Correct.
So 24% will increase to 25, 26. So you have to spend more on sustaining the level of poverty.
Yeah,
so
absolutely. So that analysis is absolutely correct. So the poverty numbers will increase. The poverty pressures of increased price revisions are obviously going to be felt at the really bottom of the pyramid. So it's very dangerous. We are creating more unproductive citizens as productive citizens, and therefore that unproductive sector doesn't really help the overall economic growth. Again, two different policies. This policy focuses on poverty, not growth. We have to shift back into growth, and growth is a completely different ballgame, and therefore the national balance sheet has to be strategically used. We can't have this kind of rapid...
Let's talk a little bit about numbers. If we can have the graph right now on the screen, because I want to have this conversation with you on this about what exactly are we looking at here?
Yeah, so this is basically a snapshot of all the programs that Sri Lanka has entered into, and this is the policy prescription of the IMF, which has been given to us since 1965. So
if we can have a zoom in of the graph.
So if you look at fiscal reduction is out of all the 17 programs, so 17 upon 17 is the number there. All the 17 programs have had this particular policy initiative, austerity. Then 16 of the programs have had monetary tightening, credit contraction, all dangerous prescriptions. Foreign reserve accumulation is basically contract the economy. So out of foreign reserve accumulation, you can see 15 of the IMF programs have had that. And exchange rate adjustments, now this is a critical thing. So these two are interlinked. So they say if you let the exchange rate free float, you will contract the economy to such an extent that you will accumulate reserves. But there are huge repercussions as a result of exchange rate, as we rightly spoke a few minutes ago about the impact of the pass-through inflation, cost of living, production cost, logistics, the competitiveness erosion, all these are part of the exchange rate. So the exchange rate fulcrum is a very, very...
What you're getting at is Doctor basically trying to say that apparently this formula and this prescription given by the IMF is not working to a country like Sri Lanka. Is that, or is there something?
I mean, that is evident. I mean, we have used this particular prescription. I mean, this is evident, right? I mean, if you can look at the policies are not really helpful to any developing country. Even Africa has the same problems. Argentina, Greece, you name it, Pakistan, and multiple countries in the world have had the same problems. And if you look at one of the biggest focal points in the IMF agreement is to help us to generate a primary surplus. Now, one of the charts I think you had was on the primary surplus. If you can...
yeah, if we can have the other one.
The pie chart that you had, yeah. Now we look at this. Out of the entire world, right, out of the 193 countries, only 30 countries have a primary surplus. 82% of the countries are in a deficit. So they insist that we adopt this, and in the primary surplus countries are many of the Scandinavian countries and countries like Saudi Arabia.
In the 30 countries, the surplus countries.
In the 30 plus countries. So the rest of the world is not having a primary, even the most developed countries, including the OECD. So what are we talking here? Why is this double standard on a developing country that's trying to get out of debt, focus on growth, distribute the growth within the country, help local industries and SMEs to rise up and compete internationally? That's the only way out. If you don't have policies conducive for growth and balance sheet stimulation, right, we will never get out of this poverty trap.
Vinith, if we can have the other graph as well. This is the balance of payment. This, I think we spoke about it last week as well.
Yeah.
Explain why this is giving us a picture that is a little bit of dire.
Yeah, so technically, if you look at it, this is the first quarter, yeah. I mean, if you look at the important point is the goods and services account, which is about $2.3 billion, right? Significant rise. So it's about 49% increase, the deficit. So
the deficit, yeah, exactly.
Deficit has increased. Now that deficit is what we're trying to fund through our services. So as the trade account, the trade deficit increases, we use services as a complementary to to cushion the trade deficit, which shouldn't be the case. Because if you look at our total export baskets, our export baskets have not really increased.
Yeah, exactly.
It's flat despite the entire depreciation. And the theory says if you depreciate the currency, your export should grow. But the numbers don't really validate that argument.
Why is that?
Because costs are passed on to the production chain, and once you increase that cost, you become uncompetitive. Right? And you can't pass on all those costs because you've got a portfolio of exports. Mm-hmm. Some exporters can pass it on. That depends on their market share and their competitive nature. Some can pass it, but a majority of exporters can't. So they have to absorb that cost. When they absorb that cost, their P&L gets impacted. When you don't have retained earnings, there is no way you can create capital formation, and new technology cannot be infused into the balance sheet, into the economy, into the company, and therefore they contract.
Doctor, if you can advise the government right now, this is the thinking you have to be taking in very, very seriously, because it's vital that you think about this as well. Okay, IMF program is ongoing. Okay, do your thing there, but rethink about these factors as well, because right now we can't be going into another crisis. Sri Lanka can't afford it. 2025, at the latter part of it, Ditwa came, and that kind of jumbled the whole economy that was slowly taking a recovery, stabilizing process. So right now, what exactly do you want the government to focus on, right?
Mahieash, again, as I said, we have gone too far down the road to do a U-turn because we are now almost into the final stages of the IMF agreement, and they have ensured,
program?
Yeah, they have ensured that we stay the course. In fact, before I came for this program,
this is what I used to argue when they were going for the 17th program. We've been telling there is no way we can come out of this program, and it keeps proving from time to time.
But the country doesn't believe in that. The country believes that IMF is the only savior and the only disciplinarian or the institute that can discipline this country, and we should follow that particular advice. And it has proven catastrophic from 1965 to right now. Multiple programs, as I showed you, have brought the same policy prescription, which have been cut and paste policies adopted in Africa and rest of the world. We have just guinea pigs in that whole process. We just simply follow that, and unfortunately we have fallen again to that particular narrative. In fact, before I came here, I saw a statement from one of the IMF representatives saying that the country is in good order, in good shape, and there is nothing to worry. So that's the narrative you have been pushed in.
Doctor, there's nothing to worry.
That's what I'm saying. So I shouldn't worry.
I really don't. We have only a few minutes on this segment, Doctor. With regard to right now, the dollar is rising, which is the one that is. I'm talking purely about the impact on the public. Not basically trying to safeguard any entity or anything or any program, but the cost on the public is really too much. Right now they can't, especially the people who are daily wage earners.
Yes.
Those people are going through such a terrible time right now. We know this dollar is not going to stop at 350. So what exactly do you recommend to the government right now to do? Because the government, fuel increment is also coming. The president himself said we may have to do that again.
Yeah.
So if that goes to 500, that's disastrous.
Yeah.
So what exactly do you think?
So dollar liquidity is of concern. As I told you, the inflows are not sufficient enough. There is a huge build-up on the trade deficit. And the trade deficit has to be funded by the two service accounts. One is the tourism, and if tourism takes a hit, as you have seen, a decline. It's a decline, and then it puts stress on the cash flow. Remember, we are spending about $500 million on spare parts alone, on top of the vehicles that we import. I just looked at the numbers. So all that adds up. If we don't have dollar revenue generative capacity, from where can we get dollars?
Quickly go.
That's one. Secondly is, do we create the environment for investment to come in? FDI has not come in. FDI has come in as a result of retained earnings in these countries by companies already operating in this country. So they don't remit it They keep it here, so that's part of.
That's another thing that I wanted to ask. There is a conversation going. I don't, exactly have the data on this, but certain companies, certain multinational companies, are parking their dollars outside Sri Lanka right now in order to look at what the picture is, and that is also impacting our reserves, right?
Yes, I mean, again, the environment is not. We have got a huge taxation built into this system, right? I mean, if you compare the two taxation of Sri Lanka and Singapore, I mean, it's a no-brainer. You will rather take it and keep it in Singapore because of the tax rates that are so low. So who will, in his right mind, want to invest in Sri Lanka or retain dollars in Sri Lanka when there is so much restrictions and so much red tape to transact in dollars? The only way you can do is to have fiscal and monetary sovereignty so that you can control your own destination, give support to the local industries, the entrepreneurs, to innovation, to grow the base, not to shrink the base. If you grow the base and you grow revenue and you make it more competitive, make the environment more business friendly and more competitively oriented, then we can compete with the world and gain market share. Now we are losing market share. Losing market share, as you just told me about companies relocating, that is a loss of market share, right? When you relocate to Africa and other places like that and you compete in those countries, the earnings retained are in the African balance sheet, not in Sri Lanka. Okay, unless they send it here as dividend, right? But majority of it will held back in those countries. And those countries benefit, not Sri Lanka. So this is where we are going wrong. We are, whatever the investment that we have that is being generated through the local entrepreneurship and local industries are now being taken out of this country because it's much more cheaper to do business out there.
Looks like we will have this economic conversation for some time right now. The news that is coming in is not exactly pretty, and we really hope the government thinks beyond outside of the box, and rather than not do the same thing that we did in 2022, which apparently has not made us strong thus far.
Yeah, 22 again, I want to say 21, 22, it was a cash flow issue. Country was closed for almost 2 years, not operative. So slightly
right now,
different.
What do you think?
Country is fully functional, right? There is no problems in global supply chains. 21, 22, COVID shut down the world, had huge implications. If you look at our remittances, if you look at our tourism revenue, really paltry. It was around 50, at one point it was 100 million, then it increased to 500 million in 2022. Now tourism income, gross incomes is about 3.5 billion. Remittances are around 8 billion. So things are pretty better from what it was on 21, 22. So completely different dynamic. And also remember, 21 and 22, they claimed that there was money printing. Now there is no money printing and we are in this situation.
It's a case study, a different case study to engage in. Dr. Kenneth Zilwa, thank you very much for being here. Really appreciate it. We're going to take a short break. Where am I looking at? Okay, we're going to take a short break. You're watching State of the Nation. Whoa. To the State of the Nation. Now, last week at the Committee for Public Finance, former Finance Minister, Parliamentarian Ravi Karunanayake raised questions regarding the growth numbers. This is where we got to know that from the mouth of the central bank governor that growth for 5% this year is not that possible. Joining me now is the former Minister of Finance, Parliamentarian Ravi Karunanayake. Thank you very much for taking the time to join me on the program, sir. Appreciate it. Recently now at a Committee on Public Finance meeting, you questioned the governor on the central bank regarding inflation and the growth numbers presented by the central bank. which was a bit back and forth. We saw that conversation between you and the governor. What was your concern there?
Hi, Mahieash. Thank you for giving me the opportunity. Yes, one of the two objectives of the central bank is to look into the inflationary control and the financial stability. So when they came back with the situation on the inflation, we found for 6 quarters, their inflationary target was not in line with what the agreement they had signed with the finance ministry. They were giving various excuses, not the solution to the problem that is there. So for six quarters, the target is off mark, would mean that there was a necessity for them to come to Committee of Public Finance and answer as to why they have missed the target. Firstly, they gave the inflationary target, saying the Census and Statistics Department, the information used as a base was in 2019, and as a result, they can't justify the validity of those information. Now, that was the base to the questioning. Then when we looked at beyond that, we found that it was not in realignment with today's context. So that was the questioning that we did. And I found that the professional or the supposed to be independent central bank was not professional enough in order to give a justifiable reason as to the departure of the inflationary trend.
Parliamentarian, now, amidst this escalation in Iran and its impact on countries like Sri Lanka, do you think the current plan by the government to keep the nation financially afloat instead of heading towards another balance of payment crisis would work?
Well, as you know, the reserves are collected in many ways. One is the tourism inflow, the remittances that come in, the investments, FDIs that come in, then the expenditure part, the monies that are paid out, the surplus of them becomes the trade surplus. That trade surplus goes against the service remittances that come in and tantamounts to the balance of payments, deficit or plus. We find the 28th of February, when the Iran conflict started, we did question on the 7th of March, that's the first time they came before Committee of Public Finance, because that was after the President made a statement in Parliament. We questioned them to see as to how their realignment with the present situation. At that particular moment, they said the remittance were in good order, the economy is very strong, this e-quoting saying is so strong that they can defend the rupee amidst all the imports that come about. And they basically gave a sunshine story. But we did question them to ask that whether this is in real life situation, because we expected the tourism to have an impact, remittances to be relatively in order, but certainly the FDIs and the import content of the oils and things like that would seriously have an impact. We, in our estimation, thought that it was going to be a 250 to 350 million impact a month. But as for them, their story was that they were strong enough that they can withhold or withstand any problem that will come about on that particular day. Today, 3 months thereafter, their story is completely different. They are saying that they don't know how far it is, etc. So on that basis, we are rather puzzled as to the behavior.
Absolutely. Parliamentarian, recently you spoke in Parliament regarding the cybercrime attacks against public institutions that the government has failed to focus on security aspects despite touting digital reforms. But the government refutes this. Why do you believe that we are still vulnerable?
Mahieash, the reason why I basically mentioned that on the 23rd of October 2025, I did question the Minister of Digital Economy as to certain areas of protectiveness, whether we had the firewalls in place, whether we had taken the basic requirements of protecting ourselves when we are going on a pro-digitization process. Because that digitization certainly will lead to prone of attack that will come in. And at that particular moment, we were given a comforting factor that the CERT was the point contact and they were certainly on top of the situation. Since then, you could see Finance Ministry had 2.5 million US postal, then you had the RDA duplicate payment, you had the France documents missing, then you had Sri Lankan Airlines paid payment in Abu Dhabi, payment in Chennai. come one after the other, you had certain attacks that were the 2.5 million in US in the finance ministry. So all of them with the NDB bank that is there. So we basically are little puzzled as to how far and how deep this cybercrime protectiveness is there. So that's the reason questioning was done, because it is incumbent on us knowing to protect ourselves for the entire economy by itself.
All right, let's leave it at that. Former Minister of Finance and current Parliamentarian Ravi Karunanayake, thank you so much. Let's take a short break. Be back with the close-up. Tonight began with one word we keep hearing again and again, Iran. But by the end of tonight's program, the real story was not Iran. The real story was Sri Lanka. Because a serious country cannot build its entire economic defense on explaining what happens overseas. At some point, the question comes home. What is the plan? What is our plan? The central bank spoke confidently about recovery now that confidence has become conditional. That is the thread tonight, that it is not one crisis, it is a chain of crises. The government strategy of asking the people to pay and then asking them to understand the crisis unless you are prepared to show them the plan. A crisis can begin overseas, but a collapse is always local here at home. And tonight the question is whether Sri Lanka has a government that can stop the fire or only explain why we are burning. Well, with that, we wrap up this edition of The State of the Nation. Thank you so much for your company. We'll see you again next week, Sunday at 7, right here on Derana News Channel. Thank you very much for watching. See you then. Bye for now.